Businesses continue to stay private longer and longer. They can sit there, they can get the capital in the private market, and there's a lot of return that's being had in the private market that a lot of individuals don't have exposure to. So that's why we wanted something to democratize where anybody can get access into it, whether you're an individual retail investor, your hedge fund, mutual fund, or pension.
Jeff Parks joins me now, CEO of Stack Capital Group, trading on the TSX under the symbol STCK. Jeff, welcome.
Thank you very much for having me today.
Jeff, why don't we start with an overview? What is the business of Stack Capital Group?
So we recently IPO'd the other day, and we have a pool of capital that we raised on the TSX, and we're going out there and looking for 15 to 20 different names to put in the portfolio. So we're looking to democratize access to those big private unicorns for people.
That's intriguing. So is your platform, are you an investment issuer, first of all?
We are a corporate issuer out there on the TSX.
Okay, interesting. So give me some examples of some of the transactions to date of the kind of that represent sort of what you're targeting.
So far we've deployed capital into 3 different names. One being Bolt Financial, which is a one-click payment processor. 3 years ago, a patent came off of the one-click checkout experience for Amazon, and Bolt has basically capitalized on that in democratizing it to other individual e-commerce sites out there. So a lot less friction when you're checking out on different e-commerce sites. And there's Varo Bank. Varo Bank is a neobank in the US. They just raised around $500+ million on their Series E at around a $2.5 billion valuation. And they're out there trying to give the 184 million individuals in the US a bank account that they can use with very little fees. So they're the only neobank in the US that actually has a charter. And then lastly, we put in indirectly into SpaceX, which I think the name speaks for itself. Very, very powerful company.
Sure. When you say indirectly, how does that work?
So we ended up buying through a special purpose vehicle that has exposure to SpaceX. So that's how we got our exposure to SpaceX and our underlying holding company.
Right. So these are obviously investments of a blue chip nature that individual investors, retail investors normally wouldn't get a chance to invest in. So does that mean that these are earlier stage pre-IPO generally?
So if you look at the J-curve, we're staying away from the seed, we're staying away from the early. What we're focusing on is the growth in late stage. So companies that have proven product market fit and companies that are kind of 6 to 36 months away from when we think they're going to IPO.
Okay, so the risk is limited.
Yeah, the risk for us is really valuation risk. What are the multiples that we're paying for these businesses, and can that growth sustain? And if that growth is sustainable and we can grow into that multiple, then we're happy.
Sure. And then to what extent do you expect your share price to be correlated to your net asset value?
Yeah, so we think over time that comes in line and potentially trades at a premium to that underlying book value per share, as there's a scarcity value to those underlying assets. It's very hard to get access into these late stage IPO unicorns.
Yeah, no kidding. I mean, I've actually written to Elon Musk on multiple occasions, volunteering to participate in Tesla, Boring Company, SpaceX. For some reason, I don't even get a reply.
I can understand.
Yeah. Well, that's great then. So this is sort of a unique beast on the TSX. Is it, as an investor, is it better to sort of view this as a sort of like an ETF or like a mutual fund or like a merchant bank?
It's kind of like a hybrid of all 3. In the whole reason we wanted to create this was, if you look at the fund world, generally having private investments in those funds, individuals will be locked up for 3, 5, 10 years. But we wanted to give people that liquidity. And that's great with the underlying stock, where if you want to buy more, you're able to. If something changes in your life, you have that flexibility through the liquidity out there in the market.
Mm-hmm. So if these companies were to pay dividends, would you stream that out to your unit holders? We would look to
reinvest that capital to grow that book value per share over time.
I see.
And a lot of them too, we would probably not expect them to pay dividends just because they're all focused in on growth. So less likely on the dividend front that
So
some of these companies will
there's
pay.
no income strategy component to this investment.
All reinvestment of capital and to grow that book value per share.
Sure. Okay, and then in terms of your own cost of capital and access to capital, what does that look like from your perspective and from one of your investors' perspective relative to, say, an individual investor going out to leverage a attempt to invest in these companies, assuming they could?
Yeah, I would say it's very, very difficult to get access into these underlying companies. It takes a lot of experience and a big network of individuals to garner access into this space. And then you obviously need larger ticket size. So that's why we here wanted to, I break it down to fractionalize, liquidize, and democratize. So you can take smaller pieces of capital and have exposure to these underlying positions within your own portfolio.
Mm-hmm. And so what was the sort of impetus for the creation of this company relative to, like, what is your background? How did you come to this point where this is the best thing you have to make best use of your time you have every day?
Yeah, so I come from the hedge fund space, been there for 10 plus years. And the one thing that I saw was a lot of funds are trying to give, it used to be 45 days liquidity, then it was 30 days liquidity. Now everyone's going over to the liquid alts, which pushes those underlying funds into larger cap investments, be it the Amazon, the Facebook, and the Google. I needed a structure where you could focus in and can take on that duration risk of having those private companies in your portfolio. And it's very hard to do that if you have a 45-day redemption time or a 30 or even down into 1. And I also saw a trend out there in the market where businesses continue to stay private longer and longer. They can sit there, they can get the capital in the private market, and there's a lot of return that's being had in the private market that a lot of individuals don't have exposure to. So that's why we wanted something that democratized where anybody can get access into it, whether you're an individual retail investor, your hedge fund, mutual fund, or pension.
Mm. So are your perfect investments all generally U.S. NASDAQ, NYSE listed names?
Yeah, for the most part. So my background comes from North American investing, so that was my bread and butter. So we'll mostly focus down in the U.S. There's some Canadian companies that we have looked into. We haven't pulled the trigger on any yet, but predominantly U.S. based.
Sure. As a market participant of lesser scale, but still, a regular participant, I look at the valuation of NASDAQ and NYSE listed tech companies, and you can't deny the fact that it's been driven largely by the activities and the actions of the central bank of the United States, who continuously has been essentially underwriting the continuous rise in value as they seek to achieve the wealth effect, which they make no secret of. My question is, does the value proposition for an investor in Stack Capital break down? Should the Fed reverse course on that, as they've been intimating they're going to?
So the big thing for us, you're definitely right. What's the elephant in the room? It's rates. If rates increase, obviously multiples come down on stocks. And that's why it's so imperative that you sit there and you buy right. And you have that sustainable growth where if you are paying a higher multiple, you will grow into that multiple over time. So that's what's great about our backgrounds is we come from the stock picking background where we're analyzing all of these different businesses and we make sure that we buy right, that if rates do go up, then we don't take too much of that duration risk with those underlying portfolio businesses.
Huh. So in accessing these sort of white shoe investments, do you have a value proposition to the issuers that make you guys a good strategic partner?
That's a great question. So we've ran into a number of different businesses where, as opposed to just taking conventional venture capital money, they like that we have come from the public side and they like that we've been in the trenches through an IPO. So we've actually gone, raised the money through the banks and brought it out to the public market, which is very beneficial for them. They also like that we can give them a perspective on, do you go through a SPAC route or do you go through an IPO? That's very, very beneficial for them. And then lastly, we've been able to introduce some of our portfolio companies to very large businesses that can actually utilize their underlying product. So that's another way that we're able to win on these deals.
Mm-hmm. So I guess I don't know how to say this without seemingly to put you a bit on the spot, but I mean, as an investor, I'd want to hear from the CEO is what is the target rate of return? I mean, you've just gone public, so there's no sort of performance history, but what is your conceptual target rate of return annually in this type of an investment that would attract my capital investment?
Yeah, so because of the underlying businesses that we're dealing with, a lot of them are high growth. So we are trying to target a 15% plus compound annual growth in book value per share over time. And obviously that can be lumpy based on underlying individual positions, whether they IPO this year or 2 years from now, but that's what our goal is over time.
Sure. And then is your focus then, are you planning to stay technology focused, or is it more a case of whatever is thematic at the time?
See, it's fantastic because we come from a generalist background. So we'll look at absolutely anything. Now, I will give an exception to biotech because we don't want a phase 3 trial and the binary risks of something works or doesn't work. But predominantly right now, as we're looking at the market, there's obviously a lot of software as a service that we're looking at. Fintechs are a very, very interesting space. The content creator economy, very, very interesting space. And same thing with in the healthcare industry as well. So we're industry agnostic. We'll look at just about anything.
And finally, are there any Canadian companies in your sort of research universe that you are considering an investment in?
Not. We have looked at 2 in the past that were very interesting, but more so we're seeing more opportunity in the U.S. versus Canada right now, just in terms of the growth, in terms of the multiples that you're paying. So.
Sure. And then what are the big catalysts in 2022 that you expect to achieve on behalf of shareholders?
I think you'll see more capital deployed in 2022, and there might even potentially be some liquidity events from underlying portfolio positions as we see them progress internally.
Okay. So then if you're constantly needing to access capital, I know I said finally, but these questions just keep occurring to me because I'm interested.
Yeah, please.
Is there, how do you manage the expectation for dilution risk by shareholders?
Yeah, so for us, we're really focused in on compounding capital organically. That's coming from the fund space. That's what is the highest priority. Compound that capital internally, and then if there's underlying positions where you did need more capital to take on that underlying position, you do have that ability to tap the markets. But we're cognizant of where our share trades in regards to the book value per share. So we'll only do that opportunistically if we see certain positions that we want to capitalize on.
Okay. Well, that's intriguing. I could talk to you for quite a bit longer about this, but we're out of time for now. I would like to come back to you in due course. Thank you very much for your time today.
Thank you very much for the time. Thank you very much for having us.
You bet. Anytime. Bye for now.